Thanks for the kind introductions, Bill, and thanks very much to Cobus and the team for your support. Always very much appreciated. One thing that's also important to note is that today is actually the 2-year anniversary of the Paydirt Unlocked series that we've been running for the past 2 years. Obviously it was done in the wake of sort of the world emerging from the early stages of the COVID-19 pandemic, and on that day in June 2020 we actually had the focus on Africa. So we're very fortunate that we're circling back and the focus is again on Africa today. Just as I said, as Bill mentioned, I'm not Dominic Piper. My name's Michael Washbourne. I often like to refer to myself as the Andrew Redmayne of Paydirt. I come in at the end of 120 minutes after everyone's done all the hard work, make the great saves and take all the glory. But anyway, more importantly, our glorious panellists are on stage with us and I'll just introduce them. To my very far left is Michael Anderson, Managing Director of Firefinch. In the middle we have Jeff Quartermaine, Managing Director of Perseus Mining. And to my immediate left is John de Vries, Managing Director of Black Rock Mining. So I'm just going to sort of break from tradition. Often I normally talk to the person immediately to my left, but I'm actually going to skip to Jeff in the middle. Jeff, obviously Perseus has been in the African mining game for quite some time, and you've been there for a large part of that journey. How have you found that investor sentiment towards both Perseus and African-focused mining companies has changed over that decade or so?
Well, it certainly changed, let me assure you, and well it might. I mean, Perseus has also changed enormously from where it was, say, 10 years ago to where it is now. I mean, when we first started off, we raised a lot of money in Toronto, and I guess the sort of company that we were in those days was a company that was offering enormous promise to the speculative end of the market, and people poured in their numbers. Now, we then sort of morphed ourselves along the way to an operator. Found out that wasn't quite as easy as one might have thought, and investors responded, in that particular way. Now, of course, since then we've come a long way, and the attitudes towards us, the types of people who invest in the company, and the attitudes have changed enormously over the last few years. But if you look at sort of investor sentiment in general, and I'm referring about West Africa as opposed to the African continent in total. I mean, there is sort of I guess various views around the world. There are people who are sort of seeking short-term significant gains, and there are plenty of projects out there who offer those. Now, they don't always materialise, but they're certainly on offer, and that attracts that sort of money. On the other hand, the more traditional, generalist kind of investor is a little bit hesitant to join the fray. They see risks there that perhaps aren't there, and so there's a full spread of attitudes and the like. And the challenge is for us as companies is to find our niches, that we find people who want to hear the story first up and then support it. And I think in that respect, Perseus's register's changed an awful lot over time, and now would rank pretty well amongst most of the global registers that are there.
Yeah. And so over that journey, has it been easier to gain traction on the ASX or on the TSX, for example?
Well, as I say, it's a function of the period that we're talking about. I mean, in the early piece, when it was a more speculative proposition, Toronto was pretty keen on West Africa at that time, so it was popular. I mean, I've always found the Australian market to be fairly xenophobic, to be frank, and I don't really want to be offending too many of our investors or fund managers out there, but certainly, the Australian investor has a fantastic mining industry in its backyard. It doesn't have to go overseas, and it doesn't have to assume risks that it's not familiar with in order to be able to get exposure to world-class mining projects. So you can absolutely understand why the Australian investor tends to, stay close to home. But so I think that's changed over a period of time as well.
Excellent. Well, and Michael, prior to your current role in Firefinch, you spent an awful lot of time helping to finance projects in Africa. How have you found that the investor attitudes have changed over the last decade or so?
Look, I think at the end of the day, there's always a specific project-related risk. There's always a company risk and relationships that can be brought to bear. You're never going to please everybody. Mali certainly isn't for everybody. But it's been interesting as we've acquired Marula, the number of people who know that asset from 2 decades ago and had a great experience then have been happy to come back. People that backed me in previous roles have been happy to come back. And I think, if you're satisfied or accepting of the fact that you'll never please everybody, there still is enough interest out there. At the end of the day, of course, projects in Africa come with risk, but the rewards are worth it. And that certainly speaks to our view of not only Marula, but the lithium project that has just sprung into life in its own right today at Goulamina with the listing of Leo. And that is a perfect example of where I think that type of opportunity, there might be a couple here locally, but there's not many. That's a world-class project that's coming to the market today, and people will back that, and people will back the likes of Simon, who's running that. So again, he can bring relationships to bear. And investors like the fact that people have got track record, that projects have demonstrable world-class qualities about them. And so the country risk is part of the equation, but it's not the only equation. The continent risk is part of the equation, it's not the only part. So I think you weigh that up, and my approach to marketing Firefinch in the last 15 months is to talk to anybody that would listen. And that means I spend an awful long part of my day talking to people, but we seriously got some traction. And you've got to accept that not everybody that you talk to will invest, but you're targeting your markets, you're targeting your conversations, and enough of them invest, you get the traction. And I think it's about and. You've got to keep going. You've got to keep talking to more and more people, briefing them on the story, briefing them on the opportunity, briefing on the rewards that you see. And all of the jurisdictions that we panelists are in fact anybody in Africa, and there's some fantastic jurisdictions. None of them are risk-free. But I've used this line before. Australia's not risk-free either. I've only been a party to one expropriation in my career, and it was in New South Wales. So people tar Africa with this brush of risk and the like. What's the conversation in Queensland as we speak? Increasing royalty rates, Oh, well, that makes them Robinson Crusoe. No, but let's not single any jurisdiction out. It's part of the equation, it's part of the analysis, but so's the project, so's the people.
Yeah. Well, John, we should perhaps come to you on about the topic of jurisdictions, because 5 years ago when you took on the role as CEO of Black Rock, you were hit with a bit of a curveball from the Tanzanian government and a sudden change in the tax regime. Can you tell us about what that experience was like and how your conversations were with investors at the time?
Michael, I've been trying to forget about that experience, I tell you. You need to put it into perspective. In my time, I've been through 2 military coups in Fiji. The last gig was New Guinea. So you've got a low-hour CEO, gets off a South African flight from Perth, and this is an old story because this is when South Africans still had aircraft. Got off there, turned the phone on, and there's like 20 SMSs and a little note from the stock exchange saying you've been suspended. So why have we been suspended? And it turns out there was a Control-Alt-Delete moment in Tanzania in terms of respect of the mining code. And you really need to look at that in 2 balances. The first one you've got to understand is why did they do it? And they did it because of perceptions of an unequal benefit sharing, and there's a whole lot of history to get into that, and that all gets to about corporate communications and the ability of any organisation to communicate with government and be very transparent about benefit sharing. And I think that's an accountability we all have. How we communicated that with our investors, we just started a DFS and we genuinely believed we had a world-class project. And as we got into this, you end up with a very difficult decision. Do you walk away from a world-class project or do you hunker down and keep going? And we made the decision, look, let's keep going with this because you don't often get world-class projects turn up. And we focused on, in the graphite space, this concept called qualification. And we've spent a lot of time in qualification, and we've come out of that now for cornerstone investor of POSCO. And we're the only graphite developer on the planet who has a cornerstone anode producer of global scale sitting in on the share register. So I think at the end of the day, it worked out well. Did we plan that on day one? No. Day one was, let's go find out what happened and why. Obviously put in place some communication strategies about what's going on. But I think this gets back to, even if you look in the Australian context, Queensland's looking to adjust coal royalties. New South Wales is really challenging to get into. So the message I put out here is West Australia's a great place to be, but WA is the anomaly, not the rest of the world. And you have to deal with political risk, and political risk is jurisdiction agnostic.
Yeah, it does. Well, John, you obviously touched on there about even your experiences in New Guinea there. The gentlemen to your left have been in countries that have traditionally had some struggles with military coups and the like. Would you rather have a military coup or a sudden change in the tax regime?
That's you, mate.
That was for you, John.
Option C, none of the above. I think ultimately, if I look at my mine manager's hat, which talks about safety of our people, safety of our community, I will put up for tax change rather than endangering my people. And I'll take that. It hurts the investors, but ultimately it doesn't hurt your people, and that's got to be your primary concern.
Jeff?
Well, not every coup hurts people. 2 months into my Firefinch career, there was a coup in Mali which involved the President and the Prime Minister being asked to step aside. It was bloodless, there was no violence, and I arrived in the country 2 days after that, and it was business as usual. So, I totally agree. Anything that puts your people, let alone the people of the country, at risk is unacceptable. But there's a perception from however many thousand miles we are away that these things are violent and dangerous, and unless they're a process, and Mali is going through a process of working towards democratic elections. They have now put down a timetable, and what I've found when I've gone there on the various occasions is that the people aren't unhappy. And the military government are largely doing the right things. They're still trying to work out who's who in this grand scheme of things. And probably their biggest challenge between now and when those elections will be run will be to identify the proper candidates and to put in place the proper processes that will stand scrutiny from the outside world, not so much from the electorate themselves. I don't think the Mali people they're probably more unhappy with the external pressures than they are with the current military government. It's all about trying to understand the detail. Unfortunately, the impact that we feel is always in the market when news like that hits, because people don't take the time to read the detail. That particular occasion in May last year, we lost 35% of our value in a day. 2-3 weeks later, I think we had won most of it back. But that you can recover from that, but it is unnecessary. Unfortunately, it's unlikely to not be the case, but it's unnecessary because it really speaks to a lack of depth of understanding, just a reaction to headlines, and that's the world over. The one thing I think that has changed so dramatically for all of us in the last decade, or maybe a little more, is that news is around the globe instantly now, and I mean in seconds. You used to have to wait a day for newspapers to be printed and for people to read them, and then a report to be written, and it would filter through. Now, the news of a coup is on Reuters and around the world in seconds. And people value that, except they don't value the backstory, the detail. Mm-hmm. And so we deal with that in many ways, shapes and forms every day, and it's the harsh reality. It's not going to change. But what is also the reality on the ground is that you can still operate business as usual. We are 1.5 years into owning and operating Marula. Barrick have been in country for 20 years through Randgold and now Barrick, AngloGold, the same. Resolute have been there for decades. They all speak to the same, their ability to operate business as usual over all of that time through multiple geopolitical events. And, I think that's worth remembering, that operational stability has been demonstrable.
Jeff, did you have anything to add there?
Yeah, I think, we've had a coup occurred recently in Sudan. I don't think our guys even knew it was going on. But, my observation of these situations is that it's not dissimilar to probably to Perth, actually. I mean, you have the political class who sit up at the top of the tree chattering away. They represent probably 0.5% of the population. They spend their life trying to outsmart each other on various bits and pieces. And the rest of the population get on with their life. And that's certainly, our experience in these sorts of things. And frankly, it comes and goes. I think, the point that you're making, Michael, about the influence of the media these days is absolutely correct, because you use the term news. I wouldn't actually use that term with what comes out on the social media these days. I mean, you know, a lot of it is somebody's very narrow, very driven opinion because they want to particularly run a barrow, and they're not giving a full story. However, we're all busy. We look at our phone or whatever and take that as gospel and the full truth, but it's absolutely nothing like that at all.
Mm-hmm. Well, Jeff, you mentioned in there about Sudan, where you have just recently completed the acquisition of Orca Gold. It's a move away from your traditional home, if you like, in West Africa. Was that seen as a bit of an investment risk by any certain sections of your shareholding?
Well, look, it's an interesting question, actually, and the response of the shareholding group was very interesting. There were three quite distinct groups of people. The first group didn't have a clue where Sudan was or anything about it, and you know, so they looked at the acquisition on its merits, and what they saw was that Perseus had put out 9% of its market capitalisation, doubled its reserve inventory, and added a 14-15 year mine life to the portfolio in a single shot. So those people were pretty darn happy with the transaction. There was a second group of people who fall into the category of people who over the last 20 years possibly have picked up a newspaper or turned on CNN and got a view of something that had occurred in the country over that time. And, you know, to be frank, a lot of it was not particularly attractive. Those people were, you know, a little concerned and did take a bit more convincing that, in fact, it wasn't quite what they thought it was. Now, from Perseus's point of view, we've done a few things along the way. We built Sissingi and we bought and built Yaouré, which were against the run of play. So those investors, after we'd talked them through what was going on in the country, took the view, well, look, okay, there is some risk around this, but you have earned the right to step out, and you've proved us wrong on a couple of occasions. So we're going to back you. We'll let you go. By the way, don't bugger it up. That was the piece that came in. The third group of people, the third group of shareholders, were people who, during the course of their education or career, had exposure to the Nubian Shield area and understood implicitly the enormous mineral wealth that is tied up in that part of the world and the fantastic opportunity that we, as first movers into Sudan, have created for ourselves. And so they were exceedingly happy about the transaction. They could see the enormous merit of it. You know, I think that the overall the lie detector on all this though is the share price. You know, as we were announcing the transaction, the share price of both companies went up, and it kept going up for quite a long time. And I think that more than anything speaks for itself, that our overall shareholder group were very happy with the transaction. A lot of people have put us on notice, though, that they are watching to see what happens. And I dare say that if we do what we've always done, and that is we do what we say we're going to do, we will be absolutely rewarded. If we fail on that front, then we'll get our just desserts.
Yeah. Well, and Michael, you mentioned today, obviously, that Leo Lithium is successfully listed on the ASX, and I think the Leo Lithium team's somewhere in the room. So congratulations to the team there on getting away. I was going to ask, though, obviously, Jeff indicated that there was a lot of support on both companies for the share prices going up on that transaction. Did you get any sort of traction on that? And was there any suggestions of the so-called African discount that companies often encounter in getting the IPO for Leo Lithium away?
Look, I don't think there was anything other than complete support for what we've been doing with that planned demerger, or indeed the bringing of Goulamina to market. And our demerger meeting was just about 3-4 weeks ago, and I think the actual resolution to demerge was voted on 99.25%. Those that didn't vote in favour have been offered psychiatric help. We had the theory and the rationale of creating a pure play, and there's plenty of precedent for that. I think our timing of the actual fundraising that went in parallel with that was great. We raised $100 million, and Simon, of course, leading the charge on that, and that was significantly oversubscribed, so that was great. Our timing of listing today possibly isn't so great. We're in the tail end of June, and that's never a great time. There's a wave of sentiment out there, headwinds and all sorts of macro factors that we can't control. But he made the point this morning at the listing, and I'll make it too. You know, we're both building long-term businesses. These share price fluctuations over these last few weeks are short-term things that, again, largely none of us can control, and that will in the end be irrelevant. One of the best bits of advice I've ever heard about worrying about your share price, which every managing director does, is at the end of the day, it only really matters when you're selling shares. When you're either selling those shares as we were in that IPO, or when an investor comes to sell his share. We believe we're both running very undervalued businesses. There's not an MD alive who doesn't believe that. But you know, there's demonstrable evidence in peer comparisons. So, you know, I don't think we've got much resistance. We also do have, however, 8,000 shareholders, so not everybody has the same investment strategy. You get to June, people are buying and selling for different reasons. None of that really needs to concern us today. Is there a value proposition? Will your patience be rewarded? Yes, and absolutely. So I think very little resistance to anything that we've been doing. You know, those who are more short-term focused in the market, you know, may have chosen to take some money off the table. We, after all, did give effectively a free in-specie distribution of most of those shares, and that's probably too big of a temptation for some people. But at the end of the day, I think everything that we've done here is consistent with the rationale to set both of those businesses up, so Goulamina and Marilla, to create value in the longer term. And there's been no opposition as we've gone around and promoted and marketed that story.
Excellent. Well, and John, speaking of sort of gaining traction in the market, you've, I guess, spoken to me many times in the past about having the double-edged sword of trying to combat the Tanzanian narrative, but also the graphite narrative. But I guess in a lot of ways they've sort of gone hand in hand because you're in such a mineral-rich region, and I think you've got, is it the second largest graphite reserve in Africa?
It's the second largest graphite reserve in the world.
So there you go.
Look, Tanzania, the way I think about this is it's a pendulum. This pendulum swings one direction and eventually it starts coming back. And, you know, in our case, it's come back very, very quickly. We signed a free carried interest agreement with the government in December last year, and we're sort of now moving down the way very, very quickly to move into project execution. So we've seen this market sentiment change in terms of Tanzania, and I think, again, it gets back to the comment I made earlier, is that political risk is jurisdiction agnostic. It'll happen everywhere, and it'll happen when you least expect it. The thing I do like about working with Tanzania and the free carried interest is it does align the interests of the government with the company. Now, that can be a benefit and a downside. The downside is you've got to be careful about any ESG downside that may induce. But the benefit is everybody gets to see a common outcome that aligns all interests. So I think that's actually a really powerful thing. Graphite. Look, graphite it was talked up very much in 2014, 2015. We're all going to be driving Teslas, and I'm seeing more and more Teslas, but I'm yet to buy one. So it's one of those things where you've got a boom that's emerging, but how quickly that boom is breaking out is subject to a number of issues. And I think the big one in our space is the role played by China, and China controls 70% of the graphite market. So when I think about China, am I thinking, are they a customer, are they a competitor, or in the African context, are they a colonial power? And in effect, they are all three, and that's how you need to start thinking about how you deal with that 70% market share.
Yeah. Well, you touched on a point I was going to ask you a bit later on, which is about not the geopolitics of necessarily Africa itself, but about what's going on elsewhere around the world. We've got a trade war with China. There's an actual war in the Ukraine. How are these affecting sort of business in Africa?
Quite profoundly. The feedback I've had out of high-level government contacts in Tanzania is the issue of food security, which most of us had thought had gone away, is suddenly standing out there again. You know, you've got 20% of the global traded grain not available to market. That makes a big difference if you're importing a lot of grain. And certainly 1.8 billion people in Africa, there's a lot of grain that gets imported. So, yeah, that's actually beginning to be a real issue, and maybe that induces migration, and then you've got all sorts of flow-on effects. Then you've got the overlay of fuel, and fuel's a doozy. If we looked at our power station, if we're running off diesel power, it was 32 cents a unit 18 months ago. It's now into the 40s. Thankfully, we've got access to grid at 8. But if you've got a very large business that's very dependent on diesel fuel, it's really going to impact you. So we're sort of seeing these flow-through effects in terms of the cost. We're seeing flow-through effects in terms of people getting very concerned about what does this mean for the future. Overall, in terms of China and the COVID lockdown in China, very, very perverse. We're looking at sourcing ball mills. So you go, well, where do you get a ball mill from? You either get it from Poland, China, South Africa. South Africa was a very competitive position till we realised they sourced the lubrication system from China. So the South Africans could only deliver at the rate at which they could get it out of China. So where China is the factory of the world and we're struggling to get stuff out of the factory of the world, that really starts to disrupt supply chains in a very, very subtle way. Where this gets to being important is, while it's increasingly getting expensive to build a mine, it's also getting increasingly difficult to source the material to build a mine. So you start looking at these super cycles in terms of price, because we didn't build enough mines when we should have. Suddenly we end up with an underlap of resource availability.
Yeah. Jeff, are you seeing sort of those similar sorts of cost pressures which are coming on from outside global factors?
Absolutely. Look, I don't think anyone who's in this business is not, to be frank. Anyone who says that they are not seeing cost pressures probably haven't looked at their accounts recently. But, it is a real issue, and how it's going to play out is very hard to predict, I'd say. I mean, we're obviously quite concerned around the food security issue in particular in respect of Sudan, where they do get a large proportion of their wheat from Ukraine and Russia. And, if that situation doesn't resolve, there's going to be a lot of hungry folk around, and that obviously leads to instability. So, no, I think it's a major problem, and without being too pessimistic around the whole thing, I don't think, there's a lot more to come, and it's going to have a fairly profound effect on our industry, and it's probably going to change, the perspectives of a lot of people. I mean, there's no doubt that there's been a squeezing on margins, so investors would look at that and say, well, maybe I should put my money somewhere else. In terms of capital costs, I think projects that maybe in 2017, 2018, 2019 look to be pretty attractive, I suspect they're not financeable today. So, there is going to be a period of uncertainty, but with uncertainty and turmoil always comes opportunity. So for companies such as ourselves that are generating quite a lot of cash and are in a strong financial position, maybe it won't be such a bad thing after all. But certainly, I'd have to say we don't want to trade on the misfortune of others, but I suspect that is going to be an inevitable outcome of all this global tension.
Yeah. Michael, are you sort of experiencing similar sorts of issues, given that I guess at the end you're still sinking your teeth into the gorilla that is Marilla?
Yeah, absolutely. Look, Jeff said, nobody's immune. I think though the sort of impact of costs on a business in isolation is always seen as a negative, but at the end of the day, your product prices have to respond to that. If there is a demand for the metals that you're producing, the minerals that you're producing, and they're not being produced, or they're costing you more to produce, that's not sustainable in a pricing environment. And there's plenty far more qualified people than me who spend their life analysing and forecasting this. But at the end of the day, the businesses are not sustainable if they're not going to make money. So that has to have its impact ultimately on the end prices. And so it's seldom, perfectly coordinated in terms of timing. So you have to be able to survive the tougher periods, which we are unequivocally in at the moment. But I'm confident that the price dynamic shifts in the end. And whilst it's probably Simon's place more than mine to talk about lithium, the prices haven't shifted there other than up in recent times. And in fact, Pilbara at another spot contract at $7,000 a tonne just now, which is another record. And the DFS that we updated back in December was modelled on $1,250 for the next 5 years. So there's a fair bit of headroom there, okay? And the costs were $300. So you know, there's a lot of headroom in certain areas. Now, we don't enjoy the same headroom in our gold business, but, you know, the gold price does respond to these price squeezes and the cost squeezes that occur, as do base metal markets. And I think that it's not, you can't look at the cost of consumables and reagents and the like in isolation from what impact that will have in the longer term on the products that you're producing.
Yeah. John, I'll just come back to a point you sort of touched on there. You're on the verge of construction at Mahenge. How have you sort of addressed the, you know, the potential rising costs that might come with developing a project in this current market?
I guess we're fortunate in that we have a very significant revenue to cost ratio, and the fact that we have the option to bring in grid power takes away a lot of that tension away from liquid fuel pricing, which is, you know, really, really important. I think where we're positioned at the moment, about to start construction, is absolutely fantastic. It takes you about 15 to 18 months to build a mine. So as this blows through, and, you know, as there are others who may be not as fortunate as us and unable to complete construction or get into construction, it just creates a massive fundamental underlap of material availability, and we'll be commissioning a mine as that underlap begins to open. And again, on top of that, with the China constraint about people actively looking to buy material that doesn't come from China, it actually ticks a lot of boxes. So cost-wise, a few headwinds, but a project that's strong enough to withstand it. But price-wise, increasingly stronger tailwinds.
All right, I can hear the clinking of plates starting to disappear a little bit, but don't worry, I'll give you a little bit of time because I would like to get some questions from the floor very shortly. We also are being live streamed today, so my colleague Fraser, I'm sure, will let me know if there are any questions that have come in via that platform. But I will just quickly touch on the subject of ESG. And Jeff, Perseus, excuse me, has obviously really tried to set the bar high in that regard. You've got quite a diverse workforce, both here in Perth, but also on the ground at each of your sort of projects. Sort of how has that sort of landscape changed over the last couple of years, given that there has been an increased push for ESG-related, credentials and practices to be put into the business?
Well, I think the change that's occurred in the last couple of years has been our external focus on it. From our point of view, it hasn't changed at all. It's always been there, and we've always addressed it very strongly. We've always worked on the basis that your fundamental social licence to operate is an absolutely key part of your business. Without that licence, you can have the best assets, the best people, most amount of money, but it doesn't work. And that's been something that has been part of what we've done forever. So what we haven't done very well, I guess, until a couple of years ago was talk about it. We had a strategy where we very deliberately went under the radar because we didn't want to, present ourselves as being the quasi-government or the like around where we're doing it. So, but in recent times, there's been a great demand from the investment community that we publicise what we do. So just like everybody else, we produce very high-quality sustainability reports and we put it all out there for everybody to see, and I think that that transparency and assurance that in fact what we say we're doing is actually happening is important to a lot of people. But I think that there's a difference in focus and different in emphasis. But each of those things, the E and the S and the G, have been hellishly important forever. It just hasn't come to the fore so much as it is now.
Michael, you mentioned before, obviously, that Marilla has a long and storied history. How much of an advantage has that been in trying to promote your ESG requirements?
Oh, it was huge. We inherited a lot of great systems, procedures, programs from Barrick, essentially, who were the operator of the mine. We took it over, and that was a great start for us, and we've certainly looked to build on that. And some people who follow us more closely will know that we've just actually strengthened our board with two very well credentialed lady directors with ESG backgrounds, and we're at the start of a journey to do better at reporting. But thankfully we inherited some great foundations in that regard, and have measured ourselves against the IFC standards and the like. Something that I was very familiar with in my Taurus days. We certainly required those that we were investing in to be compliant and subscribe to various measures like that. So, all the ingredients are there, but I think Jeff made the great point that not too many companies have, in fact, up until recently, done a good job of reporting on that. And also, the point was made that that is an ever-increasing requirement from the investment community and proxy advisors and even green funds out there who will not get past first base if you haven't got the right credentials. So it's part of the message, part of the story. But I also totally agree with Jeff. We'd be doing these things out of choice anyway, right? But it's a combination of having all the systems, procedures, and people. But the biggest impact that we can make in Mali is jobs. And we've seen that in spades at Marilla. We inherited a 200-strong workforce that was on its way to closure. So those jobs were in threat. We're now back close to 2,000 employees across our workforce and that of our contractors. That has huge knock-on effects in the villages that we surround. Where Goulamina is being constructed is subsistence farming, quite sparsely populated. We're fortunate in that we haven't got a big relocation to undertake, but there are neighbouring villages, very poor villages, and their lives are about to be transformed and brought into the mining industry in a new phase of the mining industry that's great for Mali. So all of the flow-on effects from that will come, and when we'll do all the same things that we've been doing at Marilla, they'll be replicated at Goulamina. But I think the biggest impact is jobs that just create that additional wealth in and around the operations.
Yeah. John, I could see you nodding feverishly then. How does the ESG requirements, though, differ potentially for a developer rather than an established miner?
Yeah, I'm glad you asked me this question last. I had some time to think through the answer. The way I think this one through is, as a developer, suddenly ESG looms in and you go, that's more work I have to do to get debt finance. And particularly in our case where we're looking at bringing in international institutions into Tanzania, the bar we have to get over is the same bar that BHP, Rio Tinto or South 32 has to get over. There are no concessions for junior players in this space. So it is a lot of work. And, in our case, it's a significant skill set we have to acquire. So that is a lot of work. And to put it into context, what does it mean? Yes, it means a difference in your equity pricing. It means a difference in terms of your ability to access debt, because suddenly we can now go on to a global debt platform. I did an interesting survey at a investor session in Sydney about 6 weeks ago, and it was a very large financial institution that had brought in a bunch of fund managers. We asked the question very simply about who had been on a plane in the preceding 6 months, and most hands went up. And then we asked, okay, well, in terms of that plane, did you pay for the carbon offsets? And there was only 1 or 2 hands left standing up. And the takeout from that, ESG is fundamentally important from an investor perspective, provided they're not paying for it. And that's a real challenge, because if I'm buying graphite from China, I can guarantee it's ESG compliant, not. So when we're talking about ESG, it's critically important that we don't use it as a mechanism to disadvantage places like Africa. It's important we don't use it as a mechanism to allow countries that will adopt lower standards to actually gain preferential market access, because we've made it harder for people to do this. In a similar way, I've always looked at ESG as being about a 10-to-1 multiplier, so we'll have about 200 employees for stage 1. Those 200 employees will probably put enough money in the community to feed something like 2,000 people. So that's 2,000 families of 5 or about 10,000 people who are better off for us doing a good job. I could walk down the Hay Street Mall after lunch and flip $2 to a guy in a koala suit raising money for the African orphans. I know where I would put my effort. So I think ultimately, as an industry, we have a responsibility to do ESG right. We have a responsibility to show leadership in this area, and also think from the investment perspective, the responsibility to turn around and recognise this is not a costless transaction from our point of view, particularly if you're in a development space. And we need to actually understand that we've got to put in place mechanisms that avoid market distortion around that ESG impact.
Yeah, I actually, oops. Is that working? It is. I totally agree with you on that. I mean, I've had similar had conversations with some investors around this subject at various times, and you know, we can do whatever people want us to do. We can do absolutely anything, but it does come at a cost, and people are not that willing to embrace, you know, that incremental cost, which is, you know, somewhat unfortunate. I think the other comment I'd just make around this whole ESG industry is that it is at a fairly early stage, and while people can be critical of the progress or lack of progress that is being made by the mining companies, I think there's a lot of development that's required on the other side of the fence, on the side of the fence where people are adjudicating. You know, I think, you know, this whole business of you know, having external agencies rate you if you pay the right amount of money, et cetera, you know, is fairly corrupt. And furthermore, I think that, you know, there's a lot of people out there who pontificate about things that they simply don't know what they're talking about. And I can quote an example where we got on a call one day with one of our investors, and the person's opening remark was about, you know, the underage slave labour that we used in our mine. And I said, well, that's an interesting thing. And, you know, when we dived into this a little bit, it was like, well, you know, of course you do. And I said to him, well, you know, perhaps you've seen a photograph of cobalt in DRC or something, but, you know, the way we operate wouldn't be out of place in Australia or North America or anything else like that. And, you know, this guy was sort of starting from a point of massive ignorance, yet he was in a position of determining whether what we were doing is correct and allocating capital off the back. Now, that's okay, but if you're going to do that, you've got a responsibility to inform yourself as well and to make sensible judgments. And I don't think that everyone out on that side of the fence is quite up to the mark just yet.
You had one more thing?
Yeah, Michael, one thought I'd like to put out with the ESG, and if we go back to the formation of the JORC code, it was pretty easy in the early 80s, to call a reserve a reserve. You know, a couple of drill holes, you could do whatever you wanted to. It was pretty much a free-for-all. And there was quite a lot of cataclysmic disasters as a result. Out of that came the JORC code, which is the industry looking in on itself and say, we've actually got some branding and reputational issues here, we need to do something about it. And I think where we're looking at ESG, it's about beginning to standardise some of those definitions and standardise how we react to it, and coming up with some sort of industry code so it is universal and we all know what good looks like. Because not everybody knows what good looks like, and what may be good in one person's view may not be good in another person's view. And it's really important that we start to bring together some standards. And certainly the Equator Principles are good, but, you know, the breadth of interpretation around some of those things can leave quite a bit of room for entrepreneurial flair for one or two consultants.
All right.
Just the other point about, you know, not knowing what good looks like. It's also not knowing what the community wants. You know, ask the community what it wants. You know, whether they're in Africa, or Asia, or you know, polar regions. You know, there's too many supposedly qualified people in New York, Toronto, London, and Paris who'll tell you what they think the community wants, but they haven't ever asked them.
Good point.
Excellent. All right, well, perhaps that's a good note to throw to the audience for any questions. Yes, we have a question just here. If you could just introduce yourself to the panel, that would be fantastic.
Hi, Annette Ellis here, Managing Director of Canning's Purple. And I think, Michael, the Marilla Gold Project doubled the GDP in Mali when it was launched 20 years ago. To what extent have African governments been swayed towards Australian investors and operators? You know, for a long time, they were very seduced by gifts of cheap and dodgy infrastructure from Chinese capital. And I think there's been a growing recognition that that's not always been great for the longevity of the industry in Africa. To what extent are African governments welcoming Australian operators in to mine their assets?
Well, I think we've been made extremely welcome. Our the support we've received in the acquisition, which the government were very much aware of and part of. They are indeed our 20% partner at Marilla, so it's all done with their involvement and knowledge. Interestingly, the point you make about China, that hasn't been the case in Mali. There is not an awful lot of Chinese investment in Mali, and I think one of the highlights for me about the Goulamina joint venture with Ganfeng is it will probably be one of the first major Chinese investments into Mali, and I'm more than comfortable that a partner with the credibility and standing of Ganfeng will set a fantastic precedent in that regard. So back to the point about welcoming. Well, we as I say, have this great relationship, and why wouldn't we? Because we saved the mine from closure at Marilla. Those 200 jobs were under threat. There's now an order of magnitude more than that, and we've got a revival going on that will hopefully see Marilla relive some of those former glories. It did have some fantastic heydays back when it first started. If we could create that, it would be spectacular, but we certainly believe we've got a great value proposition ahead. And then also, initially as Mali Lithium and Firefinch and now Leo Lithium, we are bringing Mali into the lithium business and West Africa into the lithium business and broadening the horizons for Mali away from just simply gold, where it does have decades of history, but they're excited about that. So they've been more than welcoming of us. I've enjoyed multiple meetings with the minister, as has Simon. They have granted us quite legitimately all the necessary permits and approvals that we need to do what we're doing at both projects. And I think that speaks for itself. We had an opening of the Goulamina construction just a couple of weeks ago, close to 1,000 people in attendance at that, including the Minister of Mines. The Minister of Mines was at Indaba. I was on a panel with them. They're very supportive. He will hopefully be here at ADU in August, September. So I can only speak highly and positively about the support we're getting. But we're not complacent. We know we have to keep delivering on our promises to maintain that relationship and indeed our license to operate. It's all about delivering on our promises, both to the community, but also ultimately commercially. They will be our partner in both those projects. So I think right now, very comfortable and positive about all of that from a Mali perspective.
Jeff, have you also found that to be the case, that you're very welcomed into the countries where you've established operations over the last couple of years?
Oh, you're very welcome, but to be frank, I don't think Australia's got anything to do with it. I think African governments would welcome any company or group that were going to come in and do something constructive for the country, and so they should. I mean, the thing about Australians, I guess, in Africa, they, and this is a generalisation, I think, is that Australians do travel pretty well and do work very well in that environment. I think the other thing is that perhaps, and maybe this is a sort of a self-serving comment, but I think that some companies, foreign companies, do turn up into these places and say, this is the way it's going to be. This is the way we do it everywhere else, and this is the way it's going to be here. And you have to adjust to my model. I don't think that is a very constructive way at all. I think, we have to, when we go to these places, understand there are significant differences in culture and attitudes and things like that, and our way may not be the best way or the way that the country wants to operate. So, you have to go there, I think, with a very strong sense of your values, be willing to adapt within the constraints of those values and work collaboratively with those governments in order to deliver what it is that they want. And I think if you do that, it doesn't matter where you come from, what colour your skin is, you're going to be welcome.
Do we have any other questions? Chris Brennan down here.
Yes, great. Thank you very much. Brendan Augustine today with SG Controls, and spent a lot of time in Africa myself. I really enjoyed the discussion about ESG. I guess if I could ask the panel to kind of narrow down to one aspect, when you're facing your ESG panel, so to speak, the questioners, the investors, what is the single most difficult thing that you need to achieve what they pose to you?
Do you want to start, John?
Yeah, I'll answer that one, and it's actually quite a surprise to most people. I have to explain to an African government why banks won't lend to me while I meet their standards, but I don't meet other people's standards. And they go, but we're the national government, we run things here. So this is where I get back to ESG can't be used as default colonial control. And it can be done in terms of it impacting your ability to attract finance. So one of the nuanced things you have to do in this space is initiate a dialogue with your host government and indeed the many stakeholders that are involved in that host government that says, while our standards are here and you guys are, for a lot of reasons, that's the standard you're working to, we have a very different standard here if we're going to be able to access international finance. So forgive us, we actually need to do things very differently to what you would normally accept. And that can be quite a complex dialogue because you've got university professors, etc., who are held in high esteem and suddenly, well, actually, we need to move away from this person who's a subject matter expert and well respected in the country to something that's entirely different. And that's not because we want to, it's because we have to. So I think there is a disconnect in there that's nuanced, and this is where I get back and saying if we can actually articulate standards that are common and well understood, such as the JORC code, that actually simplifies a lot of those conversations.
Jeff, what was your single most sort of focus
I
there?
don't know that I can answer that question, to be perfectly frank. I mean, nothing stands out as being more challenging than anything else. I mean, we have had some interesting conversations, say, with people who clearly don't understand where we're operating. And I guess, for instance, one conversation went along the lines about talking about our workforce and the diversification within the workforce, and saying, well, 40% of your workforce should be men, 40% should be women, and 20% should identify other. Well, it just so happens that in Ghana, LGBTI is illegal. It's a criminal offence. So
That might affect the swimming team now.
it may do. But I'll tell you one thing's for certain. I have no ambition to stand up in front of the workforce at Edikan and say, right, boys over here, girls over there, other over there, because I don't think I'm going to get out on the other side of that conversation. The point I'm making is that what is difficult when in dealing with some of the ESG people is that there is a fundamental lack of understanding or lack of respect for what the values and cultures are of the countries in which we operate. It's simply not a realistic proposition to say, you'll have 50% of your workforce as women, because, historically in West Africa, that has never been the case, let alone in the mining industry. So, to impose those sorts of standards in a hard and fast method is somewhat challenging to deal with. If you say, well, we want you to aspire to equality throughout every aspect of your business, we'll sign up every day for that, and we won't make any distinction on any of the diversity, criteria, whether it's sex, religion, race, culture, etc., etc. We'll deal with it as we come. So I think that's probably the biggest challenge I have is actually finding a common language with the people who are asking these questions.
I think from Firefinch's perspective, going back to a question that was raised earlier, what benefit did we sort of get, obviously, acquiring this mine from Barrick? And the answer was an enormous one. And Dr. Mark Bristow, made it his purpose early on at Marilla in Mali to maximise local content. He started mining contractors, procurement contractors, etc. They're all still there, and we're still using them. And so we've been able to pick that back up quite readily. I think, though, I'm very conscious of my team sitting over here and the people who work with operations every day. They know that on our shirts it says that safety is our #1 priority. And yes, we want to produce gold, but we want to do it safely and not hurt anybody in the process. And I think our biggest challenge is to get people to believe that we mean that. We absolutely do. But, I think there's been too many historical operations where, the CEO flies in, bangs the table and wants to know about the gold production numbers. And yes, they'll have a safety mantra and the like, but it is secondary to the fact, where's the bottom line? How's the business going? And I like to think that that's not the case with us. And we have had a couple of cases in recent quarters where we've stopped production because something was unsafe. We've inherited, a quality mine, but it's a mine that did require some, refurbishment and the like, and we're still building that back up to standards that we're happy with. We also are ramping up to significant levels of material movement that haven't been seen here for over a decade, and to do that safely is our number one priority. And sometimes we get a bit of a vacant look from the team saying, what, so you do mean that? And we do, because I don't want it on my conscience, neither does our team, that through our operations we've hurt anybody.
Yeah. I think we have time for one more question, if we had any.
Thanks very much. As Michael Atkins, I've been involved in Africa for nearly 30 years, and one of the things that always surprises me is that so many people consider Africa as a country rather than a lot of countries. But one of the things that is quite common amongst them is that the democracies are fairly new, and most of them have only had a fairly short period of time as democracy. Look how long the United Kingdom's had, and look where its democracy is now. But the thing that I would ask you is, you've talked about the different issues in governments and corruption and coups and whatever. In my experience, the biggest problem is just getting a decision made. And I think that's fairly universal through Africa, getting a decision made, and pieces of paper sit on desks for years before a decision is made. And I'd like to know whether that is something that you're finding as well.
Absolutely not. And demonstrably so in a number of very key signatures that were received in recent times, two that I'll pick out. So when we were building up to this demerger, it was always more complex with every day that passed than we'd ever imagined. It started as a concept 15 months ago. It's come to fruition today. But when we floated the idea, we didn't even have a partner, let alone a Chinese partner. That created some issues with ASX, with ASIC. You go through any demerger, there's multiple parties involved. But we also were across 3 jurisdictions, Australia, Mali, and China. And we ticked pretty much every box. But the last hurdle for us to overcome was the transfer of the mining license, the mining exploitation license, to the joint venture company from one of our subsidiaries. And that did sit on the Prime Minister's desk for a couple of weeks, certainly not years. And it was proving frustrating because that was the last hurdle before we could genuinely launch the formal demerger process. And my country manager, who is an absolute superstar, Seydou Soumega, has great relationships with the minister in particular. And he rang me on the Wednesday, said, look, Mike, we're hearing that the Prime Minister is getting on a plane to Qatar tomorrow, so if he doesn't sign it today, it'll be another week, and you roll the eyes and do the teenage thing. And we woke up the next morning, inbox was full, including an email from Seydou, here's the signed license transfer. And it transpired that, yes, the Prime Minister was getting on a plane to Qatar that night, but the Minister of Mines followed him to the airport with the package of documents, handed him the pen, and asked him to sign. And and off we went. Then more recently than that, there's a system in place in Mali where you have not only your exploitation license, but there's also a convention. The license itself is the overriding tenure and the like, but the convention, quite unusually, doesn't align in time frame with the exploitation license. So ours was up for renewal this month, and again, that was of significant importance to us. And again, the Minister of Mines had carriage of that and signed it the week of Indaba, 3 weeks well ahead of any deadline looming. And we got a 3-year extension on this exactly the same terms. So I think relationships speak volumes. Those 2 examples demonstrate that, and I'm not disputing your experience, Michael, and I know that this may be more the exception than the rule, but I'm delighted that it is.
Excellent. All right, well, I'm afraid we've run out of time, so if you could please thank our panellists for their contribution.